Hello friends! Today we're taking a focused look at HBAR. What's going on technically across multiple timeframes, which news drove the latest move, what analysts are saying, and how crypto Twitter feels about Hedera right now. We'll go through the technicals, fundamentals, recent headlines, predictions, and the social narrative all in a relaxed, voice-over-friendly format, like we're just chatting over coffee. Right now, HBAR is trading roughly in the $0.105 range after making an 8-12% weekly move and recently testing resistance around 0.103, 0.104 on February 26. Trading volume and open interest on derivatives have been ticking higher, which signals that speculators are slowly rotating back into this asset. If you look at the indicators in aggregate, the market still leans cautious. Around 70% of technical signals remain neutral or bearish, and the overall sentiment is closer to careful accumulation than full-on euphoria. At the same time, the HBAR fear and greed style gauges are sitting in an extreme fear zone historically. That's the kind of zone where local or even midterm bottoms often form. In other words, HBAR is not in a blow-off top, but in a phase where early buyers with stronger conviction are quietly positioning while the broader crowd is still hesitant. Technical analysis. Levels, patterns, scenarios. On the daily time frame, HBAR is in a potential bullish reversal phase after a long period of consolidation and correction. Price is pressing into a cluster of resistance that has been capping moves for weeks, while moving averages start to flatten and hint at a possible bullish crossover if momentum continues. The key local resistance right now sits in the 0.103-0.105 zone. That's where we're seeing consistent profit taking after the recent February bounce. If HBAR can break above this area, and more importantly, hold that level as support, the technical picture opens up room for further upside in the coming days and weeks. If the breakout fails, we're likely to see another retest of the 0.0950.1 support region, which previously attracted strong bids. That zone is essentially the battlefield between bulls trying to build a higher floor and bears hoping to push price back into the lower consolidation range. Short-term price prediction models are fairly conservative right now. They see modest upside, maybe around 0.4, 0.6% in the near term, targeting roughly the 0.1, 0.1, 0.105 band over the next day or so. Over the past week, HBAR has printed 3 green days out of 7, with relatively controlled volatility, more of a gradual recovery than a wild pump dump. So from a pure price action standpoint, HBAR looks like a token trying to transition from a sideways grind into a structured uptrend, but still wrestling with heavy resistance and a cautious market. Fundamental drivers, FedEx, ETF, and stablecoins. Now let's talk about the big fundamental catalyst behind this move. First, FedEx has joined the Hedera Governing Council. That's not some random mid-cap company. We're talking about a logistics giant with around $90 billion in annual revenue and roughly 500,000 employees, processing over 16 million packages per day globally. This is a real-world heavyweight stepping into Hedera's governance structure. What does that mean in practice? FedEx plans to run a Hedera node and participate in governance decisions, essentially, in the evolution of the network alongside other large corporations. For the narrative, this is huge. A major logistics player is choosing Hedera as infrastructure for transparent, verifiable supply chains, digital identity, and data exchange. So the story here is not speculative altcoin, but infrastructure layer for enterprise-grade applications, and HBAR is the asset tied to that infrastructure. Second, we have an ETF that has accumulated more than 521 million HBAR under management, over 1% of the total token supply. When that amount of supply gets locked in a regulated product, it can create a meaningful supply squeeze on the spot market, especially if demand continues to trend higher. For medium-term investors, this matters a lot. It means there is a chunk of HBAR that's being held in a more long-term, institutional format rather than just flipping around on exchanges. Third, we're seeing a spike in stablecoin activity on Hedera. Over the past week, stablecoin supply on the network has increased by roughly 17%, and almost all of that growth comes from USDC. When stablecoin liquidity ramps up, it usually means capital is flowing into trade, deploy into DeFi, or interact with new on-chain products. So, if you zoom out, the fundamental story right now is a top-tier enterprise, FedEx, joining the council, an ETF locking a substantial chunk of supply, a noticeable increase in stablecoin and network activity. That's a pretty solid combo to support higher valuations over time, as long as Hedera keeps delivering on its roadmap. Looking at derivatives, open interest in HBAR futures has increased by a few percent over the last 24 hours, and average funding rates have drifted into positive territory. That tells us long positions are becoming more aggressive, traders are willing to pay to stay long, anticipating continued upside. This move in price is also tied to a rise in network usage. Transaction counts and stablecoin flows are ramping up alongside the price, not in isolation. That's an important distinction. When price rises with no on-chain confirmation, it often fades quickly. When price, usage, and derivatives all move together, the rally tends to be more sustainable. That said, overall sentiment metrics still classify HBAR as predominantly bearish or at best cautiously neutral. About 70% of technical indicators have not flipped fully bullish yet. That creates an interesting setup. Fundamentals and on-chain data are turning more positive, while much of the market is still skeptical. For patient players, these mismatches between improving fundamentals and lagging sentiment often create some of the best entries early, relative to the broader crowd, but not so early that there are no real signals yet. Latest news and Twitter narrative. Over the last 24 hours, the headline flow around HBAR has essentially revolved around three themes. The continued reaction to FedEx joining the Hedera Governing Council, discussion of the ETF holding hundreds of millions of HBAR, the acceleration in stablecoin activity, and RWA-friendly positioning on Hedera. Crypto news outlets are framing Hedera more and more as a platform where enterprise use cases, real-world asset tokenization, and regulatory-friendly infrastructure intersect. It's being pitched less as another loan and more as a purpose-built network for compliant tokenization and data-rich applications. Analyst platforms projecting towards the end of February and into early March 2026 paint a cautiously optimistic picture. Modest short-term upside into the 0.101-0.105 area, with potential for a broader move higher later if network activity and institutional interest keep growing. But they also stress that this hinges heavily on Hedera delivering on its technical and business roadmap. On crypto Twitter, you can clearly see two camps forming. The bullish camp is pushing the FedEx plus ETF plus RWA plus enterprise narrative, calling HBAR one of the underappreciated blue chips of this cycle. The skeptical camp keeps reminding everyone that enterprise stories have appeared in previous cycles, and sometimes took a long time to reflect in price if they did at all. Still, the overall tone on social media is noticeably more positive than it was just a few weeks ago. Many community accounts and analysts are now actively discussing Hedera's role in tokenized assets, stablecoins, and supply chain solutions, rather than ignoring it completely like during the quieter months. To sum everything up, HBAR is currently trading around $0.10 to $0.103, bumping right into a key resistance zone while still sitting below the mega cap spotlight. And that's exactly where asymmetric opportunities usually start. On the cautious side, roughly 70% of technical indicators are not yet signaling a clear bull trend, and any disappointment on the fundamental front could send price back toward the 0.094, 0.098 support range. On the bullish side, we now have three heavyweight drivers that don't usually appear by chance and rarely finish playing out in a single week. FedEx entering the Hedera Governing Council, an ETF locking more than 521 million HBAR, and a clear uptick in stablecoin and RWA-related activity on the network. A company like FedEx, with tens of billions in annual revenue and millions of daily shipments, doesn't show up to farm a meme pump. It shows up to build supply chain infrastructure with Hedera as the trust and data layer. Technically, the chart lines up neatly with that story. Price is sitting just under the 0.103 resistance level, and whether we unlock that widely discussed up to 57% upside toward roughly 0.125, 0.13 depends on how cleanly HBAR can break and hold above that zone. If buyers manage to flip this area into support, sentiment can quickly shift from skeptical chop to a broader recovery phase, forcing sideline traders and funds to re-enter and chase. If instead this resistance holds and price slips back below 0.1, then breaks down through 0.09 for 0.098, the script changes. We go back into an extended range with risk of deeper correction, and HBAR once again becomes more of a slow accumulation asset than a short-term trader's playground. In that case, the smart move for long-term holders is to watch real network usage, transaction trends, stablecoin liquidity, and new council members more than the 5-minute candles, because those fundamentals will ultimately decide whether the next major leg up arrives in 2026, 2027. Right now, Twitter and the media are just starting to push the FedEx plus ETF plus RWA plus AI regulation storyline, but the market is still voting cautiously rather than with full-blown FOMO. That tells us we're not yet in the final euphoria stage. We're in an early repricing phase where the fundamentals have stepped up, but the majority hasn't fully rotated into HBAR. Historically, those are exactly the phases that tend to offer the best entries, not for people chasing 5-minute pumps, but for those willing to hold through the real fundamental cycle.